What if I told you that even a profitable trading strategy spends 98% of the time in a drawdown? That means almost every single day you're not hitting new highs. Sounds painful, right? But this is the reality of trading that nobody talks about. And if you don't understand this, you might abandon a winning strategy too soon. Hi traders, if we haven't met, I'm Lisa, an algorithmic trader, and today we're going to look at a realistic equity curve of one of these strategies in my live accounts. Now, it's important to understand that this is not an over-optimized equity curve because it is not 100% perfect and smooth. So this strategy right here was built using a custom workflow designed for robustness and to give the highest probability of actually working in a live trading environment. Today, I'm going to show you with a software called Quant Analyzer. Now, there is a paid version, but here I am showing the totally free version so you can do this for your own live accounts as well. And this software accepts multiple inputs. It can take a MetaTrader 4, MetaTrader 5, my FX book, FX Blue, and CSV file. So what I've already gone and done is I loaded up my CSV file of all the trades of one of my strategies. So if we go to Analyze and go to the equity chart, this is the overall equity chart of this gold 1 hour trading strategy. Now, I picked this strategy on purpose because it is not a smooth and perfect equity chart. I do have other strategies where the equity chart is much smoother, but I don't want to showcase those strategies too much because then people get the impression that everything is always rosy all the time. So this is more of a realistic equity chart. This is a nice balance of drawdown periods, upwards periods, and sideways periods. And the great thing about Quant Analyzer 4, see, this is the default view, but there is another hidden view up here. So up the top, I'm going to select this icon right here. So now you see a whole bunch of green dots. And what this green dot system is, it shows you the highest high. So for example, here, when you're starting off trading, you start off with making a profit, but then you see a pretty big drawdown period and you don't see a brand new higher high on your account until about this next point here where you see the next green dot. So what I've gone and done is counted all these green dots to see how many trading days we are actually making profitable higher highs in our trading account. So this strategy here, we have data trading back 17 years, of which most of it is out of sample. And over the 17 years of trading, there are about 251 trading days, which is about 4,179 actual trading days within the past 17 years. And out of those 4,000 trading days, how many do you think was actually making higher highs in our trading account? Drum roll, and we have only 91 days that were making higher highs in our trading account, which is represented by these green dots on the chart here. So every single green dot, if you count them up, is only accounting for 91 days of trading. So if you do the math, 91 days of trading out of 4,000 trading days means 98% of the time you are actually in drawdown. If you have a habit, like many traders do, to automatically log into your phone every day and check the balance of your trading account, 98% of the time you are going to be disappointed because you have not made new higher highs in your trading account. Think about it from a psychology perspective. Every day you wake up, you check your phone, and you're going to be disappointed. So regardless on if you're trading manually or with robots, you're still going to be generally overall disappointed every time you check your phone every single day. So for those people who say that there is absolutely no emotion with robots trading because all the robot does the work for you, that is a blatant lie. Before we go on, let me tell you about DarwinX Zero. If you're not familiar with them, they are a platform designed to reward good traders. So you can get a simulated 100K account to trade and earn money from your trading. And currently there are a total of 4 different ways to make money on DarwinX. And these 4 different methods of making money coincide with the 4 different stages in DarwinX. So when you first start off, you are in the calibration stage. This is where the risk engine is trying to understand what you are like as a trader. Do you trade a lot of the time, or are you a small, slow swing trader? For me as an algorithmic trader, this process takes about 2 weeks, and then you move on to Darwinia Silver. In Darwinia Silver, you can get between 30 to 375k in allocation that you get to keep up to 3 months, and you get to stack it 3 times as well. In the silver stage, you can try to compete with everyone else if you want to and try to aim for the 375k in allocation. However, if you don't want to and you just want the 30k in allocation and earn money on that 30k, then you just have to use this risk calculator to find out the minimum monthly profit that you need to make. After Darwinia Silver, then you've got Darwinia Gold, where you are eligible for much larger capital, like 500k, and you get to keep it for 6 months. And these allocations also stack, so you can stack up to 6 allocations at any one time, keeping all of those for 6 months. At this stage, your Darwinia index is also eligible for investor capital. So investors can find you on the Dar1x platform and invest in your trading. And other people like THA, one of the best, longest and most consistent traders on the Dar1x platform, has received a total payout of 958,000 euros and currently managing 25 million. And most recently, Dar1x added 2 permanent 100k allocations that you keep forever. You will never lose them once you get them. I've personally been trading with Dar1x for a year and a half. I've received multiple payouts from them and made it to Darwinia Gold. So if you're a trader and want to make some extra money, then I have a discount below if you decide to sign up. Thanks Dar1x for sponsoring this video. Now back to our equity chart. I've already shown you the green dots, which is really good to understand how many days you are actually making higher highs on your account. But this software, which is totally free, by the way, you can download it and import your strategy at any time. There are a few other options that I think is really good to help you with your psychology to understand how your trading might play out in the future. So up the top under stagnation marker, click the button and select the second icon, and now you can see in red is the biggest period of stagnation, which is where you are not making higher highs on your account. So this is showing a period of 1,239 days. So you were in drawdown for 1,239 days. Let's turn that off. And next one, I want to show you the drawdown. So select either the dollar or percentage sign. So I'm going to go with percentage. And now at the bottom, you can see in red the periods of a drawdown where you weren't making higher highs. Again, another great way to see how your drawdowns are evolving over time. I see way too many people who just look at an overall equity chart that is going for 15, 20 years. They'll put it on a live account and then start trading it. But as soon as their account starts to go into drawdown, it could be a few days, it could be a couple of weeks, then they freak out. They didn't really analyze and look at the equity chart from a expectation and look at how big the stagnation and the drawdown periods have been historically. By looking and actually analyzing your equity chart in detail, this will help you a lot with your psychology. And while we're talking about psychology, the most important aspect of trading, regardless of your manual trading or algorithmic trading, if you want to hear some actual practical tips on how to deal with psychology from an algorithmic perspective, then watch this video right here. Thanks for watching. Bye.